It's me Pavitran here. Today we're gonna do a quick weekly forecast of crude oil and how crude is going to behave in a coming week. Before that, small recap of previous week and what are the levels which I have given and how crude has been reacting to that. It's a sell on rise market which I have informed you before. Just quick checking. We'll be checking in 1 hour time frame. So this was the opening. As you can see. I just drawn the trend line last week. This was the trend line, the upper trend line. Later this week, I drawn the new one. And on last week, I said if the price tries to come near this region, if it tested this region, then we can able to short here. And this was the first touch, and this was the second. And after that, on maybe near to Tuesday, it has taken a resistance over this region, and if you have shorted here, then yeah, you can able to book here or here, so depending upon the conditions or depending upon the area which you're feeling comfortable with. It's a clear sell on rise market. As you can see, a clear lower high, lower low, lower high, lower low, lower high, and lower low. So after somewhere on 29th of October, it has broken the trend line and it's broken the support which has been pretty much stable from 4th of September. So this was the support region from 36 to $37 region. I initiated my long at 37, and after that I kept a stop loss at 36. On the day it just triggered my stop loss, then I was okay. Because for the last 2 to 3 times, whenever I initiated the position around $37 region, I found a good risk reward. So as you can see, there are maybe out 5th of October or 2nd of October, I exactly don't remember that. I had initiated 37 and 36 as my stop loss, and it really rallied till 41. So it's a kind of a $4 move rally. So it's always okay that my risk reward is somewhere near to 1:4. So even if I fail 4 times, the next time if I get a big rally, then I will be on a cost to cost basis. So my probability or rate of success does not matter, because my risk reward is pretty much very high, and I will be taking these kind of trades. So I don't know for how long it will be in a swing trade, and I won't be booking small profits. I will be aiming for the full target, and even it can stay in a range for a month or two or a week or two, or maybe on the next day itself it can even fall. So we don't know what is going to happen. Then let's see how this goes on. And the level which I have marked here on Monday, it has clearly broken, and I have deleted the level right now. This was the level from 38 to 39.5. So 39 to 39.5 was the level which I have drawn the level. On Monday it clearly broken that big bearish candle. After that you can see a follow through, and after that a small, as usual, a struggled movement. And after that on Tuesday it tried to recover to go in a buy trend, or you can even say a retracement to the fall which had happened previously. And after that it took again a resistance over there. It's a bearish engulfing candle, and if you have shorted over here with a small retracement, or even shorted at the closing with the bearish engulfing candle higher stop loss, you might have been in the rally. This is a small risk reward. If you have taken a risk of somewhere around maybe 30 cents or 40 cents, you would have gained a much larger one. Say this is nearly a $2 range. So for it's like maybe 1:4, it's kind of range, or 1:5 if you had hold around to the target. So that's okay, no problem. Whatever you are doing that, just try to increase the risk reward. Maybe try to go in for the 1:2 or 1:3, because we don't know how much we have an accuracy. And even if we have a 10% accuracy with the risk reward of 1:10, then that's pretty much it's a life changing for you, because 1:10 risk reward with at least 10 or even 1%, you will always be in the mark. So you have to slightly improve your accuracy, and your risk reward plays a pivotal role in your trades. And after that the F36, the major support has been taken down, and until and unless 37 or 38 is in place. So this is the first lower high which has been going to be tested. If market has to turn into a bearish or a bullish mode, for bearish it has to break 35, and for bullish it has to first to take down the lower high which is somewhere around 36.5. So if it breaks 37, then lower high will be taken, and it has to form higher low. So a close or a reversal above 35 or 35.5 will initially start the market sentiment will be starting into a bullish mode. So the range for the coming week is 42. You have to buy only above 42. So till this region, or even if it takes support at 37 or 36, you should be wary of numerous election results and the data of crude oil, let's say API data and crude oil data, because stockpile is keep on getting accumulated. So you have to be cautious of it. And US election is around the corner, the result is around the corner. Before you have taken any positions or try to go with a hedge, because of wild moves is bound to happen. If a result goes in a Trump favor, we will be seeing a good buying pressure. If result goes against him, then we might even see a sharp fall in the coming markets. We don't know how the result is going to play, but volatility will be there. And it's better to sit on the sidelines than to lose entire capital in this wild moves. It's always to be on the safer side, you have to protect your capital. Let's see how this one goes on. And the bigger range is 42 and 42 and 39. On a smaller range is somewhere around 39 to 34. Why I have marked 34 is if you can see on a 4-hour candle, then we will might get a really good idea over this region. Why I have marked this, because this is the recent or pretty much 25th May support. So it has taken resistance, it has came down, it again taken resistance, it has came down, it has broken and took support. So 34 to 35, so that region will be a crucial one. And if it breaks that, then we can able to see two region of testing, so somewhere around 22nd of May and 1st of June. So that region will be a very pivotal one. It's around 31. So the bigger range, if it breaks 34, then 31 will be on the cards. So as far as crude goes, if it takes resistance at 36, then 34 and $30 will be in place. And if it again goes back and takes support at 37, then 42 can be tested. So only we don't know how exactly it is going to test 42. It can move in a sideways, and it can even go in a straight sharp one. So we don't know how that is going to pan out. If you want to go for a bigger range, then 42 and maybe 32 or 31. But I don't think 42 will be that much bigger range for this, considering volatility. For a bigger range, maybe consider 39 to 32, and for small tighter range you should consider 37 and 34. So let's see how this one goes out. Still you be the market sentiment hasn't changed into a bull mode, so try to be in a bear mode. For market sentiment to change into a bull mode, we need to break previous lower high, and again we need to create a new higher low. So if this concept or this context comes into play, then only we will be able to see some kind of bullish move coming into the market. Until and unless the lower high is taken out, or new lower high is taken out and new higher low is formed, we will be seeing the same sell on rise market. Only if a lower high taken out and higher low is formed, then we will be seeing the bull move. Let's see how this week goes on. So levels to keep in touch is it's pretty much near the support, and if it takes support at 34, then it will be slightly difficult for 37 to be taken, or it can even move in this range. and if 34 is taken out, then 31 will be possible. And if it takes support at 37, then it can possibly test 39. So these are the ranges you should be watching out very carefully. And even coming week, just be neutral. Just don't be looking out for buy on dips or sell on rise. Just be neutral and hold only light positions, don't trade heavily. Once the volatility settles down, then we can able to take a big positions. Thank you.